You don't think we're necessarily going to have a Powell who leans hawkish this time? You don't necessarily think, what, that he needs to reset expectations?
No, I think he will try to sound hawkish. It's whether that'll be heard as hawkish, I think, is the message. I think he's going to try being kind of say, look, the job's not done. This idea that, yeah, we've made great progress, but hey, we need to, you know, make sure inflation gets much closer to target. Remember, most measures of inflation, there's many different ways of measuring it, are still running more than twice the target level. And so he's got to say, yes, we've got a policy lag, yes, it's encouraging, but we're nowhere close to done. I think he's going to try to sound hawkish. My concern is that the market wants to see a dovish message, and unless he's super aggressive, it might react dovishly. And then I'm going to go tomorrow, we're going to go, was that a hawkish or dovish Fed? And I'm going, well, the reaction's dovish, but was he hawkish or dovish? I don't know.
Okay, so we might see a contrast between the way that the markets have responded and the words we all heard.
Yes.
But you've been drawing on the Taylor rule, though, also for some inspiration as we head into this Fed meeting, giving you a sense of what kind of, you know, as we see the rate go higher, and it is going higher and higher, even if at reduced levels, up by another 25 basis points is the expectations today. Where does that leave us versus this rule?
So, well, the Taylor rule has been kind of adjusted over time, and, you know, it does require a few assumptions on where the neutral rate is and what you think the NAIRU rate, the inflation adjusting rate of unemployment. But I think that no matter how generous you are, we're basically at the minimum level. After today's 25 basis points hike, assuming we get 25 basis points, we're kind of at the minimum level of where policy can be, no matter how you modify it. Many people would say the Taylor rule is suggesting rates still probably need to be a percentage point or so higher, which is obviously way higher than the market is thinking. So Taylor rule has always been a little bit generous, but I think it kind of warns that anyone who's expecting a very dovish outcome will be disappointed.
Okay, so that's what we're seeing on the macro side, and the Fed, of course, looms large. In amongst all of this, we're getting corporate earnings, and we highlighted a couple of them in our headlines, but there are plenty out there. I mean, Caterpillar stands out as being one that disappointed the markets, and I know that some in the Markets Live blog have been writing about the importance of margins this time around. It's not enough to just beat on the top line, and certainly if you disappoint on the bottom line, you better beat on margins or some kind of sense of beating in the future on that operating level. That's where the market's focus seems to be.
Yeah, and like, understand, because that's what we were wondering about this year, is that, like, was inflation and, you know, going to hit the idea of margins finally getting squeezed? You know, are people being too optimistic on kind of earnings? And I think that was the known kind of issue. The thing I thought was interesting in Caterpillar was that they were, like, very negative on China. The whole rest of the world is like, China's the real bright spot, China reopening. And Caterpillar were actually like, hey, look, our earnings were disappointing, but we're positive on the outlook. We're not so positive on China. And the point they made is that there is just such an overbuild, particularly in the construction area, that they said this is a long hangover. And the reopening is, reading between the lines, they were saying the reopening is more of a services story, not the kind of reopening we've got used to seeing in the last 20 years in China, which has been a construction commodity story.
Yeah, which obviously is very much more important to Caterpillar. Mark, thank you for thoughts so far. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.